morning, good afternoon, wherever you're watching from. Welcome once again to my channel. This is 10 p.m. here, um, 31st of March, but entering the 1st of April. And it's very important time because whenever the month changes, there's kind of a change in the market. There's significant change that occurs in the market. You can see on my chart, we're talking about GBP JPY today. GBP JPY on the 4 hours time frame. So I'm trying to catch the move for the week. So whenever I go to a higher time frame, I'm trying to catch the move for the week. And the move for the week, market has been choppy all through. It's been an uptrend, but we're observing that there has been this is a lower high. This is a lower high occurring here. There has been higher lows all this while. You can see from here there has been higher lows. There has been higher lows everywhere before now. And this is some of the higher lows. Let me show you what I mean by higher lows. This is a low. This is the beginning of the low. Yeah. This is another low here. This is a higher low. Let me clone it so it will be faster. Let me take that here. Sorry. I'll drag that along. Sorry, my chat is misbehaving. I'm trying to, this is a low. Let me pick it from here. This is another low. This is another equal low. So at this point, this is a low. Yes, this is the beginning of the low of the uptrend. This is another low. These other ones here are not lows. I'm trying to delete them, but I don't know why they are misbehaving. Okay, this is another low. These are two equal lows. This is another low here. This is a low, and this is another low. Now, whenever the market is forming a, a higher low, it means that the market is going in an uptrend. Like here, this is the low. This is the low. It's another low. These two equal lows. This is another low. You can see that this low is higher than this. These ones here are higher than this. This is higher than this too. So what happens is that whenever there's a double low here, it forms a what we know as support stand. This place is called a support stand. So whenever there's a support, there's also called this a double bottom. So it signifies that the market is still going to go over to the higher side. That's why this market pushed up and came down. This is another low. Now the market, after making this low, moved up higher. This is a high. Then the low is supposed to be, market is not supposed to get to this point. It's supposed to be above, around this area. Market is supposed to be around this area. Let me show what I mean. The market is supposed to be around this area, higher than this low. That's supposed to be around this area. That's where the market is supposed to be. But the market did not stop here. Market pushed all the way down below the previous low. What this tells us in the market is that it's obvious that the market wants to turn around from an uptrend to a downtrend. Now let me just pick up the lows. Look at the lows there. This was the former trend of the market. Let's use the line graph for it so it will be clearer. Okay, this is the former trend of the market. You can see we're looking to touch the tips of the market. Start. So these are the tips of the market. So you can see it perfectly. This is the uptrend. Now let's switch back to the candles so you understand clearer. Since this was an uptrend, this uptrend started on the 10th of March. Yeah, this is the beginning on the 10th of March. Let's say 11th, 10, 11 thereabouts. 10th of March. So the market started trending up. And this is up to the 31st of March. So the market has trended for 21 days. So the market like basically traded throughout the 3 weeks. So we're going to be looking to catch it in the downside. It's either going to go down, it's going to go up. But my bias is down because the market has gone outside this trend line, it has gone outside this trend line. So and there's a support right below it. This is not a support yet because it has just been tested once. So if I was to trade this market, I'm going to look out for selling opportunities. Now, our first sell opportunity will be here. Using this fair value gap, this red boxes you're seeing here are known as fair value gap. I'll put a pending sell here. Let's call it sell stop at the end of this fair value gap. You can see this small red box here. This is where you put your sell. Then my first target will be to target the previous support, right? I'm targeting previous support. This is a 1:1 risk to reward ratio. 1:1. So either way, if the market comes down to pick my sell, I'm targeting this support zone as my take profit. And if the market doesn't it picks my sell and goes above to to go back into the trend, that means it's going to be hitting me out on a loss. But based on my analysis and what I'm seeing on the charts, it's most likely the market will get to this support rather than going to the upside because of these fair value gaps in front of it already. Just tell me what you think in the comment section, and to learn more, click on the like button, subscribe, and check the description below to gain access to our ebook, which teaches you the basics and fundamentals of FX. Thanks for watching.